Hey everyone, welcome back to the channel, your number one source for income-oriented investing, how to generate passive income from a diversified portfolio of high-yield funds. In the Canadian landscape, in the Canadian ETF covered call landscape that is, there's a few big players like BMO, CI, Brompton, Harvest, Hamilton, but there's a lesser known player called Evolve ETFs, and I recently did a video covering two of their newer broad-based covered call ETFs, ETSX and ESPX, that do covered calls on the S&P 500 and the TSX 60, which I feel are really great, diversified one-stop shop options if you like index investing. But they also have some very unique and pretty cool sector specific covered call ETFs, some of which I own myself, some of which I've already discussed on the channel. So I think it's time to revisit some of these. And I like to thank Evolve for being a good friend of the channel and being kind enough to sponsor this video. So in this video, we'll review about 6 or 7 of these unique covered call, sector specific covered call ETFs. We'll check them out. I feel that some are great pickups right now, especially the financials one. So we'll see what they're all about, how they compare to the bigger providers, and I think you'll be pleasantly surprised because Evolve ETFs does have some very unique and really good performing, well-performing covered call ETFs. So let's check some of these out together right now. So I want to focus on 3 financial covered call ETFs first. The first one is Bank. I own this one myself. This is the Evolve Canadian Banks and Lifeco's Enhanced Yield Index Fund. So this is Harvest's only covered call and leveraged ETF so far in their lineup. There's 25% leverage, so it's very modest leverage. And they do covered calls, Evolve's strategy typically goes up to 33% of the portfolio, very similar to what Harvest does. And it is a actively managed covered call strategy. So you see that, first of all, let's check out what the holdings are, because this is an index-based ETF. It basically holds, 10 banks and life cos, really. So you're not going to be surprised by any of them. You got the big 6 banks. You also have Manulife, Sun Life, Great West Life, and Power Corp of Canada. So these are the 10 stocks. They're pretty much equal weight. So these are really the powerhouses of the financials. So you got not only the 6 banks, but also the life insurance companies. So a little bit diversification there, not exclusively the 6 banks. And you could see that the annual distribution yield is absolutely astronomical. This is based the beginning of November, but we could just do the calculation right now. So the monthly distribution has been upgraded or increased from 7 cents to 9.3 cents. So if we take a look at the latest market price as of November 6th here, if we just do the annual dividend rate, which is the monthly multiplied by 12, you have $1.11 here. So you just divide it by, let's just say 6.69. So you see that the yield is astronomical. It's over 16, almost 17% yield right now. Of course, this is going to change daily with the stock price. If the stock price goes up, of course, the yield is going to go down, right? And if the opposite will happen as well. So this is a very interesting option if you really want to get into the Canadian financial space, which has been suffering lately. Bank is a really good option if you want to have the life insurance companies as well. I thought that was very interesting here. Management fee is really low at 0.6. The MER I don't think is available because it's not been a year this has been out, but very competitive management fee. The only one that has covered calls and 25% leverage, index based, right? 10 stocks, equal weight, very simple, and a great pickup right now because the Canadian financials are suffering and no distribution cuts as of yet, which is great. The next financial one is Call. I own this one myself as well. This focuses on the US banks, no leverage here, but covered calls. And this one has been around actually for quite a long time. If you look at the distributions here, you see that it actually came out in 2017, this fund, and this ETF has been consistently raising their monthly distributions right now, 12.5 cents a month, which translates to $1.50 annual dividend. So if we just do $1.50 based on the approximate or the November 6th price of about $10.10, you'll see that the yield is just under 15%, hovering near the 15% mark. I find that's very high. And no distribution cuts as of late, even with the recent volatility. So US banks have been getting killed recently, but I think the tide's about to turn. If you think so as well, Call is a great ETF. If you're an income investor, you don't want to maybe go all in and you don't have a crazy amount of faith in the US banks like I do. That's why you would get the covered call product, really to help you lower your volatility. And there's another, probably the most popular US banks covered call ETF in Canada, ZWK from BMO. And I just want to do the comparison. It makes sense to do the total return comparison because both ETFs have been out for quite a while. And you could see that call is actually outperforming ZWK. It's actually outperforming it a little bit. So I just wanted to show you, I'm not saying one is better than the other, but the numbers don't lie. And this is as of 2019. So you see that ZWK is at minus 18.61% total return, and call is a little bit less at minus 16.74. Of course, these numbers are not great, but it's only normal because these banks got killed recently. But you got to think as a long-term investor. So this is a great entry point for call if you want to invest in the U.S. banks. Very, very competitive ETF like we saw. Very low management fee as well as 45 basis points. I checked the MER. It is 68 basis points. You can check that out for yourself. You just click on documents and you go to ETF facts and you see here 68 basis points. So very competitive compared to ZWK, the biggest, BMO, the biggest covered call provider in Canada. So I own call as well. I own a little, about just under 2% of my portfolio is call to really capture, the big drop in the U.S. bank. So I think, both bank and call are really good opportunistic sector specific pickups right now. Yes, they're not diversified, but they do hold the quality financials, which is a cyclical sector. So this could be a great idea to capitalize these two ETFs. Very, very interesting. And another financials one that they have, this is very, very unique. I personally don't own this one myself, but it might be a great idea as well. This is European bank, so it's very hard for Canadians to get as far as I know, this is the only European bank covered call ETF. So they actually do covered calls on this one as well. It is a smaller fund, but if you want to add some diversification to your financials portfolio, this might be a great idea because it's all the top banks in Europe. Right, and you scroll down. There's 20 of them, and you'll probably recognize a few of them. BNP, I recognize BNP, ING. So the HSBC, of course. These are really the big banks all over Europe. So this could be a pretty good idea if you're looking for financials diversification. You're an income investor. Covered calls as well. And you see here that the yield is just under 8%. And I was quite surprised looking at the performance. The last year, up 21%. So for some reason, the European banks have been a lot stronger than the North American ones. So these three are, financial sector-specific ETFs, which I don't think should be ignored. I personally really like bank and call. I own both of them myself. So and then you got the Europe one as well. Now, there are a couple of other unique covered call ETFs, sector-specific covered call ETFs I want to go through. Base is one of them. This is the Global Materials and Mining Enhanced Yield Index ETF. This is very unique because typically you'll have a gold producers or metal producers covered call ETF. But this one not only has some miners, it also has a lot of steel producers, and chemical companies as well, like Dow, but also some gold producers. So this is very unique that it's diversified within the basic materials sphere. And some people always ask me, what are your favorite ones for, or what are the covered call ETFs for, basic materials? Well, there's not many. Most of them, there's Horizons and CI have a gold producers one, but this is very unique because it's gold producers and steel and chemical companies. And the yield is really nice at just under 10%. And this one's been out. Let's see here. It's been out since 2019, and it also has been having increased monthly distributions. You see here that right now it's at 20 sets a month. So you'll get an approximate yield of really high 9, near the 10% mark. And of course, they're all quality companies as well. So this is also a unique one. I don't think should be ignored and could be a good part of your portfolio if you're if you're an income investor, you like covered calls, you want that monthly income, and you want some really material stocks, some mining stocks, all in one ETF. Very, very unique. A new one they just came out with. This is very new, and this is the stock symbol is QQQY, not to be confused with QQQY from Defiance ETFs. That's on the US market. This is on the Canadian market, and this focuses on technology companies. And two things that are very interesting. Number one, they decided to go up to 50% of the portfolio in covered calls. That's why you see that really, really nice yield of almost 13%. This is not leverage, by the way. This is just, there's no leverage here. And instead of doing, this is why this is unique. Instead of doing, the covered calls on the NASDAQ index, they took out all the non-technology stocks out of the NASDAQ index. and kind of made their own index with just the technology companies. So you see here, it's not 100 companies, it's 38 companies. It's only going to be the technology companies on the NASDAQ. I thought that was very interesting. You see that the index is called the NASDAQ 100, sector adjusted, market cap weighted. So it's basically the NASDAQ 100, you could say, without the non-technology companies. So if you look at the portfolio, you'll of course recognize a lot of the companies, right? It's all going to be the big blue chip technology companies. It is market cap weighted. So the bigger players, you know, you have a little bit more weight, kind of like an index, right? So you see Apple, Microsoft, Facebook, Nvidia, Google, Broadcom. I guess the bigger the company is, the bigger percentage it's going to be. So this is a really cool way to get access to, you know, most of the technology companies on the NASDAQ with covered calls up to 50% coverage. This one just came out. I think let's see the distribution. Only one distribution has come out yet. Brand new, 21 cents a month here. Very interesting if you're in the market for technology. I know there's a lot of technology covered call ETFs, but this could be a great option here. You also have a very low management fee, very competitive at 50 basis points. The MER is not out yet because it's not been a year. The fund has been out. So here's another, you know, newer option from Evolve ETF, another sector specific one that focuses on technology. And no, I'm not going to compare it to anybody because it just came out anyway. But one ETF that's been around for a really long time is a healthcare one. So they have Life. This is a healthcare covered call ETF. It holds 20 big cap blue chip healthcare companies, mostly in the US, of course. You have a really nice yield. This one has been around for a really long time. Has a monthly dividend of 16 cents a month now, which translates to about 10% yield or something like that, along those lines. Of course, that changes every day, right? Based on the stock price. But what I found really interesting is, of course, we know that HHL from Harvest is the biggest one by far. It has over $1 billion in AUM. This one has, less than a quarter of that at 267. But what I found interesting is that if you compare it to HHL in terms of total returns, it's actually outperforming it a little bit. Right, you see that here. So, you know, I'm not saying that it's going to be better than HHL or anything like that. I'm not saying that. I'm just showing you the numbers. You got to make your own deduction. I'm just showing you that, you know, this is a good option if you want healthcare. It's very, very competitive, like we saw, compared to HHL. And it also has a lower management fee as well of 45 basis points. I thought that was very interesting. Of course, the MER is going to be much higher if we look at the MER. I don't know it at the top of my head. 68, which is very competitive and lower than HHL. I'm pretty sure about that. So here's a healthcare one that could be, you know, if you're in the market for healthcare covered call ETF, Life could be a great option as well. This one, however, is not on 50% of the portfolio. The covered call ratio is on a third of the portfolio, just like HHL. And last but not least is another brand new ETF. This is their own bond ETF. So there's quite a few of them that have come out on the Canadian market where they're writing covered calls on US long-term bonds because there's a lot of volatility with interest rates. The yield on those is fairly high and there's a lot of growth potential. So Evolve came out with their own called Bond. And it is all long-term. If we look at the portfolio, you're going to see that it holds TLT, which is, of course, what we expect, but also the Vanguard long-term, 60/40. So it's 100% long-term. And they're writing covered calls, not on 33, but they decided to go on 50% of the portfolio. So very, similar strategy to the H-bond ETF from Hamilton. But the cool thing about this one, I have to point out, is that they completely waived the management fee for the next 6 months until believe it's the end of March. So this could be very interesting. The 0% management fee, so it's all obviously very, very competitive, but then the management fee is coming back. So you could consider bond as well if you're in the market for some fixed income with covered calls to really enhance that monthly income. So these are, they have a couple of other ones, but these are the ones that are very interesting to me in terms of their uniqueness. They're all sector specific, unlike the two ETFs that I covered in the previous video, ESPX and ETSX, which I really like. These are just S&P 500 with cover calls, TSX 60 with cover calls. So make sure to check out that video if you haven't seen it. Also, last year, I can't believe it's almost been a year. If you're, you want to learn more about Evolve and the CEO and the guy who runs this company, Mr. Raj, I did a over an hour Q&A with him. Well, actually, the Q&A was about an hour. I review some of these ETFs again in that video, and I talked to him a lot about his mindset behind some of these ETFs, this cover call strategy. So, if you're interested, in any one of these ETFs, you want to learn more about Evolve, I strongly suggest you check out that video from a year ago. So that's about it. So yeah, Evolve ETFs, very interesting, lesser known covered call ETF provider, but like we saw, they have some very, very unique options. So make sure to check them out and don't ignore them just because they're they're not as big as BMO, etc., etc. So that's it, everyone. Hopefully you enjoyed the video. Give me a thumbs up. I would really appreciate it, and see you next time.